Everybody needs money. That's why they call it money. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio by Ron Gross. We're wrapping up the week.
I love that quote.
It's one of my. It's the best movie quote about money, bar none. Thank you, David Mamet. Let's get right to the earnings. We'll start with MercadoLibre, the eBay of Latin America. Shares up big. They beat on the top and bottom line. It's looking pretty good.
Looking pretty good, but it's been a rough 4 or 5 months for this stock. When you're focused in Argentina and Venezuela, you've got inflation issues, currency exchange issues. The stock has really not done well. It's nice to see a rebound today. Revenue up 30%, beat expectations. The company is doing well. It's just operating in an area of the world that's a little bit uncertain.
Yeah, it's the eBay of Latin America, but let's be clear. This is a company that is a fraction of the size of eBay. And one thing it has going for it that eBay doesn't really is some pretty insane growth when you look at it on a yearly basis. 4 straight years of growth of 30% or more. Is that the kind of thing they can keep up? Are they still in that growth mode?
I think they still have a pretty long growth runway ahead, which is kind of, it was interesting as we saw the sell-off over the last 4 months. You had some people saying, wow, what an incredible opportunity. Others saying, it's too uncertain right now, I'm going to stay away. Today the bulls have decided and won the day.
All right, fourth quarter results looking good for Deckers Outdoor, but guidance for Q1, yikes. And once again, we're seeing that guidance trumps results.
True, that is true in this particular case because it really took investors by surprise. They are guiding to a loss versus an expected profit. So not just a reduced profit, actually a loss, which really was a big surprise. They're blaming it on new store openings, the cost of new store openings, increased marketing expenses, but investors just weren't expecting it. But fourth quarter was strong, as you said. I think there was a over 40% increase in net income, so the company continues to do well, but no one likes to see a loss for the coming quarter. Stock sold off.
What do you think of the stock right now when you look at it, when you take everything into account? Does it look like a value opportunity?
Stock's still about 20 times earnings, so it's still a little rich for me, but it's a well-run company, very reliant on Uggs, which always worried me. It's not as reliant as it used to be, but it's still a concern. So I would wait for additional pullbacks before I personally got interested.
Okay, this seems to be a running theme in terms of cutting guidance because Pier 1 Imports has cut full-year guidance. This is the second month in a row they've cut their guidance. They're blaming the weather.
They are.
And they're getting punished for it. They're not getting any benefit of the doubt like we saw a week ago with Panera getting the benefit of the doubt from investors. Do you think this is warranted?
Well, it certainly is a common theme. It's not like they're the only ones blaming the polar vortex. So a lot of other retailers blaming the same thing. They saw soft store traffic. They actually had to close some stores temporarily, which really can hurt. When you do some adjusting for their comp store sales numbers, they were actually down 5.7%. That's, I think, a pretty bad metric, and that's what investors are focused on, selling the stock off.
All right, that's going to do it for this week's action. Let's look ahead to next week. What's a stock I can put on my watch list?
One of my favorite companies is Costco. They report next week. We've owned this company for years in $1 million portfolio, but we've had it on hold as the stock has run up. We're over $115 per share. I'd love to have a reason to upgrade the stock back to buy, so I'll be watching with open eyes to see what they have to say.
All right, for Ron Gross, I'm Chris Hill. Thanks for watching. We'll see you on Monday.